Okay, it's the top of the hour. So once again, good morning, good afternoon, good evening. I'm Martyn Lewis, and it's my pleasure to host this next 30-30. Our format is 30 minutes of presentation and 30 minutes of discussion. Today's topic is the myth and the magic of the sales funnel, a topic that is near and dear to my heart. After decades of being in sales and sales management, this is a tool that I have seen used and misused every possible way you can think of. Now, as we go through this, please note there's question and answers. So please feel free to put in questions. There's also a chat box, so feel free to use the chat box and the Q&A. At the end of the 30-minute session, we'll be coming back and answering any questions that you may have. So just by way of introduction, it's Market Partners. I founded the company a little over 20 years ago. For the last 18 years, we've really been conducting research into how customers buy and why they don't. We published a book of all that material just a few years ago. So kind of that's who we are. So what are we going to do in today's session? Well, we're going to explore 7 myths and 7 truths of the sales funnel or sales pipeline, call it what you will. We're going to go through the history. Where the heck did the sales funnel come from? Who first invented this thing? We're going to talk about how it's a vital tool and how it's actually not being used as a vital tool in many, many situations. We're going to talk about what are the stages. Of course, the sales funnel or sales pipeline is always divided into steps, stages, or layers. What is that? What's that all about? We're going to talk about forecasting, very much mixed up with sales pipeline. We'll talk about that. We'll get into the myth of 3x, that you've got to have 3 times your quota in your funnel. We'll talk about that. We'll talk about how to plan the optimal sales pipeline, sales funnel, and share with you 7 best practices. So it's 7 myths, 7 truths, 7 best practices, and 7 topics we're going to go through. So today is a day of 7s. So let's start with the ubiquitous sales funnel. Where do you think this first came through? I'm not going to do a poll, but just be honest, take a look at it. Is this something that dates back to 1898? Could it be 1908 with Ford and the Model T, 1948 IBM, the selling powerhouse that they were, or 1968 a sales training company? So think about this. When did the first sales funnel come out? Who invented the sales funnel? The answer is 1898. It happened to be a chap by the name of 𝗵𝗃𝗂𝗯𝗃 Lewis. I don't think a relation to me, but kind of an interesting thing. He was an advertising executive in the late 1800s and started a company called the Advertisers Agency, had a very popular, it wouldn't have been a podcast in those days, but a very popular commentary on Ask Lewis About It, where you could ask any kind of questions on sales and marketing, and he would answer them. And here it is, 1898, he came out with the 4 stages of the purchase process. Yes, I just said that, purchase process, not sales process. The original sales funnel came about to show the stages of the customer moving through the purchase process. And of course, what it was that very famous attract, maintain interest, create desire, get action that this fellow, Mr. Lewis, came up with. So that came from 1898. So with that, let's talk about today's sales funnel. Well, today's sales funnel, sales pipeline, call it what you will, as I said, is really a vital tool for business. It's how we manage a portfolio of opportunities. It provides the business radar of what's coming in so we can coordinate. It matches supply and demand. Organizations should be really dependent on their sales funnel to show what the demand is going to be and what the supply is that they must accommodate. It's a critical planning and diagnostic tool for understanding what it is, where your revenue is coming from, what's changing in your revenue projections. And it's strategic to the business. The sales pipeline should be absolutely a strategic tool. However, in truth, this is what we often see, a sales pipeline that's somewhat knotted up. I am absolutely staggered by how much time people spend on spreadsheets and CRM systems with the sales pipeline to get very little value. Hours are spent with sales pipelines, and it really translates to little value or little use to many people. And what happens is tends to be companies put in more time and more effort to get very little. So it's often confused with forecasting. The sales pipeline becomes a forecasting tool, which is very, very different from what it should be. It's cumbersome, it's gamed. Salespeople game it. They hold back, they sandbag, they don't put everything in it, or they move things around to suit what their needs are. It's more time than it's worth, and it's tactical at best. So the gap between what the sales pipeline could be and what it usually is huge. So let's talk about it. This is about managing the business. If we don't manage the business, if we don't manage the business of sales, it's just hard work, and then even more hard work. What we need to know and manage in order to manage the business, in order to be effective at any level of sales management, what we need to know is what's happening in our business, what's happening short and long term, what should happen, what do we want to happen, what can we expect short and long term, where do we invest, where do we invest our time, where do we invest our resources, how do we manage our business? That's what we should be doing. Now, most importantly, let's deal with this. If there's one way to really get me excited, is to talk about above the funnel opportunities. There can't be any such thing as an above the funnel opportunity. Every opportunity that you know of as an organization, every opportunity that you're investing in, every opportunity that you're aware of should be tracked. And where should it be tracked? Obviously in the sales pipeline. Now, different stages can be owned by different people. We can see early stages perhaps being owned by marketing. We can see later stages perhaps being owned by inside sales. And then maybe it's passed to outside sales or account management, whatever it is. So there's nothing wrong with different roles, different functions, owning different stages. But every opportunity you know of, from the first time a lead is connected with you, should be tracked. If it's not tracked, you can't be managing your business. So that brings me to the next topic. What exactly are those stages or layers? We always see in sales pipelines, sales funnels, we always see the layers, the stages, the steps. What are they? Well, myth number one, they are not forecast probabilities. So if anybody out there has got a sales funnel that's 0%, 50%, 75%, you do not have a sales pipeline, you have a forecasting tool. So the forecast probabilities are nothing to do with the stages of the sales funnel. At this time, you may decide this webinar is not for you and you don't agree with that, but bear with me. So it's not forecast probabilities. It's not stages of a sales process. If you thought it was getting radical when I said it wasn't forecast probabilities, even more radical, it is no longer stages of a sales process. As you saw in the late 1800s, it wasn't. It became the sales process, but in today's world, where buyers are so disconnected from sellers, it can't be the stages of the sales process. And things like one, shortlisted, no decision, they're not stages. They're not progression through a sales pipeline. They are the status. A particular opportunity can be shown as one, or shortlisted, or no decision. Those are characteristics of an opportunity. They're not stages. So that brings me to what are the stages? Truth number one, the stages of the sales pipeline today have got to be the stages of the buying journey. So there it is. There's a particular buying journey. That is a very generic macro buying journey, but it shows you 5 stages, and the 5 stages of the sales funnel should be the 5 stages of the buying journey. You should have observable exit criteria, observable behavior and actions that you can tell where is the customer in the buying journey. If they've done these things, they're at stage 2. If they've done these things, they're past stage 2, they're stage 3. So you should have an objective way of categorizing all opportunities by where they are in the customer's buying journey. This is the only way to manage business. You want to know where they are in the customer's buying journey. Is the customer even in a buying journey? It doesn't matter where they are in a sales process. Just because you've done a proposal to the customer doesn't mean they're about to buy. What dictates whether they're about to buy is where they are in the buying journey. This also gives you meaningful measurement, enables you to say, well, every opportunity is at step 3. Is it here in the buying journey? So this is what we can expect. This is what we have to do. So now let's deal with the forecast confusion. The stages of the sales pipeline, as I shared, do not align to forecast probability. You can see if we're lining it up this way, there are opportunities that are late in the buying journey, but maybe we're not the incumbent. Maybe we are competing to try and break in. So the probability would be low that we're going to win that business, or lower. Whereas maybe something early in the buying journey, if we are the incumbent, if we have the market share and it's add-on, an upgrade, then the forecast probability could be very, very high for an early stage opportunity. So the forecast probabilities do not directly correlate to the stages in the sales pipeline. And of course, the forecast is a subset of the sales funnel. The sales funnel or pipeline is all the opportunities that you're aware of. And then that is a subset of those would be the forecast. And indeed, you could, if you wish, have different steps of forecast. So you could have 50%, 75%, commit, whatever you want to do. But that's nothing to do with where they are in the pipeline. Now we'll tackle the mix of 3X. Gosh, how long have I been hearing that your funnel should be 3 times your quota? That is a total myth. It's a myth because different businesses require different types of funnel sizes. So as we're going to see in just a few moments, different businesses require different sizes of pipeline. They don't all require 3X. Maybe it may be, but it could be 1.2, could be 5. It all depends on things like flow and conversion, which we're going to talk about. And then here's the other foot that drops. Reason number 2 is a funnel size is not a useful metric. So let's say you've got 3X. Let's say your quota for the year is $1 million and you've got a $3 million pipeline. Is that healthy? Well, what about if next month you still got a $3 million pipeline and it's the same 3 million, and the next month and the next month? So you've got a $3 million pipeline, you're at 3X, but it's the same pipeline every month. There's no flow through the pipeline. So size is unfortunately not a useful metric. And then final reason, if you ask for 3X, you're going to get 3X. So you ask salespeople to have 3 times the quota, they'll give it to you. But is that going to be real opportunities? No, it's going to be myth. So now how do you build an optimal sales funnel? So the first thing is, it's rarely one funnel. And this leads to the next truth. You've got to divide the business into sub funnels. Let's take a look at what I mean by that. Let's go to a bakery. I don't know how many people out there are running a bakery, but here you go. Loaves of bread. Let's look at vital metrics, which we're going to come back to. The sales cycle time for a loaf of bread is 2 minutes, right? It takes 2 minutes for somebody to come in, ask for a loaf of bread, pick one up, and pay for it and leave. Prospects per period, you get 135 leads a day. Your conversion ratio is 98%. Of all those people that walk in the door for the loaf of bread, most of them walk out with a loaf of bread. You close them. The average order size is $4.32. But you also sell wedding cakes. The cycle time for a wedding cake is, you have found out, 4 months. From when somebody comes in to when they place an order, it's 4 months. You get 4 people a week asking about wedding cakes. You close 45% of those, but the average order size there is $635. So that means that as a bakery, you've got 2 sub pipelines, sub funnels. If you want $237,000 a year, here it is. Here's how you do it. Simple math. 135 leads a day. You're going to close 98% of them times $4.32. That's $570 a day, or $178,000 a year. You put your wedding cakes in there, and you see you're getting $59,000 from your wedding cakes. So there it is. That's how you get $237,000, $250,000 from a bakery selling loaves of bread and wedding cakes. But you can see we cannot confuse this and try and make it one sales pipeline. The metrics of the different pipelines are so different. The time, the close ratios, the average order size is so different. You can't plan. You've got to divide it down into those separate businesses. And here's another important point. You want to increase your business as a bakery? Well, what can you do? You can't just increase the size of the pipeline. Well, I suppose you could if you slow down and you've got a good lineup of people wanting bread. You could have 100 people in the line waiting, but your close ratio may go down because people will leave. It's not the size. What you need to do if you want to increase your business, you need to increase the leads, the people coming in for loaves of bread or inquiring about wedding cakes. You want to increase your conversion. More people, you've got 45% that you're converting for wedding cakes, put that up. Put the order size up. Maybe charge $7 for a loaf of bread. You may well see then the number of customers going down when they find out your loaves of bread are $7, or change the mix. Maybe market more for wedding cakes or loaves of bread, whatever it is. But you've got to adjust something. Now, hopefully you're transposing this into your own business and thinking, okay, if I'm not making my target or I want to achieve more, what can I do? I can increase the leads, I can increase the conversion, I can increase the order size, or I can change my mix of business. But that's it. Those are the levers you can pull. So we're going to call those the vital metrics. The vital metrics, and here's that sales funnel again with an order flying away from it at stage 5. The truth of what we do when we look at pipelines is we've got to factor in time. It's not the size of the pipeline, it's the time, what's flowing through the pipeline. Now, I don't want to get too far into this, but it's fluid dynamics if you want to get into this. This is stuff flowing through a pipeline. So time is the main factor that you want to look at. Time is the key. So the vital metrics are, and there's 4 of them. These are the things we need to measure, control, and manage. The first one is the input. What is the input? So how much are we putting in to the top of the pipeline? So that's the input. The next one is the time. How long does it take to go from step to step to step to step and go from lead through to order? The third one is the conversion. And you can see this is by step. So how many opportunities in step 1 do we convert to step 2? How many opportunities in step 3 do we convert to step 4? So conversion. And then order size. What's the order size, like the wedding cakes and the loaves of bread? What's the order size coming out the end of the pipeline? So those are the 4 metrics that are the metrics that we need to measure and manage when it comes to the sales pipeline. So how do we plan an optimal sales pipeline, an optimal sales funnel? So let's say you're managing a business and you have a goal for the year. Could be whatever it is, choose it. You could be a sales rep, you could be a sales manager, you could be a vice president of sales, you could be a CEO. You've got a target to make. So how do you plan and how do you manage the sales pipeline? Well, there's 4 ways to do it. We're going to go through each one of these. First of all, divide the business into the sub-businesses. Second, align the stages to the buying journey. Thirdly, calculate what's achieved to achieve your target, and then factor in time, which you're going to see, and we're going to do some math now. So the first thing you want to do is divide your business into sub-funnels. So what you want to do is you want to look at, like we did with the bakery, you want to look at your different businesses and break them up into the sub-businesses, the wedding cakes, the loaves of bread. Then you want to align this to the stages of the market's buying journey. So here it is. We're going to take a very, very simple example here. We're going to say there's just four stages in this buying journey. It so happens it's awareness, investigation, detailed planning, and decision. So we're making this a very, very simple buying journey, but it should be your buying journey. It should reflect the steps that your customers go through in their buying journey. So we look at this and we say, okay, what are we going to do? If we want to do $300,000 of business from this pipeline, what do we need to do? So the first thing then is to look at our time and conversion. We're going to say that for the first stage, customers are going to take 5 days, then 45 days, 20 days, and 15 days. Then we're going to look at the conversion. We're going to say all of those prospects that we get in at stage 1, we're going to convert 20% of those to the next stage. So that's very simple. You can guess, you can measure, you can use analytics, but a guess is better than nothing. If you don't have anything, then you're just flying blind. So a guess is good enough to start with. Then you can start to measure against it. So now you can say, how many leads do we need? How many opportunities do we need at each stage to generate 1 order? And there it is. Obviously 35.86 is a little ridiculous, but in terms of size, you need about 35 opportunities at that stage that will generate 1 order. Now we know we're aiming for $300,000 out of this pipeline. Our average order size is 60. So we therefore need 5 orders during the course of the year, or whatever period it is, we need 5. So all we do is we multiply the number of leads required for 1 by 5. And there we are. We get a simple math equation. 180 are required at step 1, 835 are required at step 2, 23 at step 3, and 8 at step 4. Now here's the trick, the truth. You don't need those opportunities all at one time. Yes, you need them over the course of a year, but they're going to convert. So if you had 8 opportunities at that last stage, 15 days later, you're going to get the $300,000 you're looking for. So the big question that I see so few people even attempt to answer is, what should my sales pipeline look like at any one time? Because if I'm looking at it as a sales rep, as a sales manager, or a vice president of sales, I'm looking at what is my sales pipeline today What does it look like? So how do you know? What should your target be? You've got the metrics, they're there on that slide. What should they be? Well, if you factor in time, this is the fluid dynamics, this is how are things going to flow. Guess what? That's what you get. That's what this sales pipeline should look like at any one time. 14 opportunities at step 1, 25 at step 2, 7 at step 3, and 2 at step 4. Now, how we got those numbers, we don't have time for that, but if you're interested, just email me, and my email will be at the end. Email me, I'll send you the spreadsheet. We're factoring in time to see what the flow should be through the sales pipeline. Now, for the really observant of you, you may see something very interesting happening here. So now, as a manager, as a sales rep, as a sales manager, as vice president of sales, what do I need to focus on? Well, if I put 3.5 leads in a week, so let's say 3 to 4 leads a week, if I get 3 to 4 leads a week, and we follow those metrics, that time and that conversion. So we're looking at moving things through our pipeline in 5 days through step 1, 45 days in step 2, 20% of those in step 1 go to step 2, 65% of those in step 2 go to step 3. If we manage that and we get 3.5 new leads a week, we will get $300,000 in the 1-year period. We are then managing our pipeline. Now, if we see that things are not working, if we see things are taking longer or conversions are not as high, we need to adjust. We either need more input, or we need to have higher order size, or we need to adjust the plan. We need to bring the plan down and say, sorry, we're not going to get 300,000, we get 200,000, but we're finally managing the business. So truth number 6 is don't manage the size. The size is not important. It's the input, the flow, the conversion, and the order size that we really want to manage. And interesting enough, if you're really observant, myth number 7, here it is. The sales funnel is not shaped like a funnel. In many cases, it is not. Look at the shape. 14 opportunities at step 1, 25 at step 2. That is a function of time and conversion. And this confounds many, many people. The ideal funnel is not shaped like a funnel. You actually want to get the leads passing through very quickly. So you need to, at any one time, now you may have thousands of leads over the course of a year, but you need them to move through the funnel quickly. So when you take a snapshot of your sales pipeline, you don't see so many because they're moving so quickly. That is what should happen. So it is a myth to try and make a funnel size. And like I said, I've been talking about this for 10 years. I still don't see many organizations getting it. And CRM systems are always pushing you to try and have a funnel, and they're managing it by size. This is a myth. This is why so many people are chasing their tails, because it doesn't work that way. You want to manage the input, the flow, the conversion, and the average order size. So with that, let's take a look at the topic of how the sales pipeline should underlie everything. Now, this is the sales manager's view of the world. The sales manager's view of the world is fairly simple, and I was one. Perhaps my favorite role was being a frontline sales manager. So you know that your life is all about creating results. And the thing that creates results is selling activity. The more and the better selling activity you can do, the higher your results. And then there's this thing called administration. Administration is doing your forecast reviews, your pipeline reports, your expenses, all that kind of stuff. And the sales manager's view of the world is every minute spent on administration is a minute taken away from selling activity, therefore decreases results. So sales managers rightfully hate administration because it takes them away from what generates results. Now, the sad thing is, and I've already said it, that forecasting and pipeline management are seen as administration. This is wrong. The truth is, effective funnel management is at the heart of productive selling. That we've got to turn that equation around, not look at it as administration, but look at it upon business management. If we do our business management right, we know where to invest our time. We know what's coming at us. We know which are the opportunities we need to invest in, what we need to do, to move our funnel. We know where the weaknesses are in our pipeline. We know that we need a greater flow rate. We can put time into that. Whatever it may be, through business management, we can see what's happening in our business, invest our time and resources in the right way. We can also discover best practices. We can look at maybe somebody on the team or a particular team has got a better conversion ratio or a higher opportunity size or more flow. So we can look at what are they doing differently? What are the best practices? And we can start to see when there's different things happening in the market, we can see because we're managing those vital metrics. It's also at the heart of performance coaching. It stops sales managers chasing their tail and starts to give you direction at who is doing what and how can I coach them to be more effective. So to me, sales funnel management is at the heart of performance coaching and good business management. So as we wrap up here and move to question time, 7 best practices. 7 best practices, we've covered most of these, but let's summarize. The stages of the sales funnel are the stages of the market's buyer journey. There is no doubt about that in my mind. Forecast is a subset of the sales funnel, and it's nothing to do with the stages of the sales pipeline. Every opportunity that you are working on, every opportunity you know of should be tracked and in the pipeline somewhere. You must plan the pipeline to achieve the goal. Do that. Start by dividing the business up into its components, up into wedding cakes and loaves of bread, up into the different businesses that have different metrics, different flow rates, different order sizes. You can't compound all these together. That's averaging things out. And quite frankly, that is one of the root causes of all the agony we see today. We've got to divide things up. If you're in the renewal business and the add-on business or net new business, those are different businesses. You may be managing them all. You need to divide them up and look at each one separately. And then each one should be aligned to the stages of that buying journey. Then you calculate what's required at any one time to achieve the goal you're looking at. And then you manage the input, the flow, the time, the conversion, the order size. If you're not achieving the metrics, if you're not achieving your goals, change either the performance or the plan. Don't go on chasing your tail. If you're seeing that you're not achieving it, you look at it. Can I increase the flow rate? Can I increase the time or decrease the time rather? Can I increase the conversion rate or increase the order size? And if the answer is no, I can't do that, or I don't see how, then the plan is wrong, or you're going to underachieve the plan, or maybe overachieve it. It could be good news as well. Use funnel metrics, managing those funnel metrics, those 4 metrics. Use those metrics to really manage the business and determine market dynamics. And the sales funnel and the forecast cycle should be the foundation for performance coaching and managing the business. Every month when we do forecasting, when we do our planning, we should look back. What did we do? What did we think we were going to do? What's going to happen? It's a feedback loop. It's an incredibly valuable feedback loop. And we should be looking at what can we do differently based on that. So there it is. We've been 28 minutes of our 30 minutes. That's what we went through. We went through the history of the sales funnel, how it's been around for a while, 130 years, but it started as a way to track the purchase process. Amazingly so. I made the point that I believe it is a vital tool to business. We talked about the stages lining up to the buying journey. We talked about how forecasting is a separate exercise, must not be confused with the sales funnel or pipeline. We talked about the myth of 3 times quota. We talked about how to build an optimal sales funnel and got into some pretty heavy math there, but it's the only way to plan the sales pipeline. And we talked about best practices. So here's some resources. As always, our website, our blog, we try and keep the blog fresh. These ideas are in there. We welcome your contribution into our blog. LinkedIn, follow us on LinkedIn. Of course, my book, How Customers Buy and Why They Don't. This is all in the book. A presentation summary of what we've talked about today can be had from Anthony Rocha at 𝗵𝗃-partners.com. And that is me, 𝗵_Lewis at 𝗵𝗃-partners.com. So that's it. And don't miss our next 30/30. Exciting topic. The topic of next time's 30/30 is going to be engaging and staying relevant across the buying journey. Very important to me because as we've seen, buyers and sellers become disconnected, and buyers going through their buying journey, at least 50%, some say 75% through their buying journey before they connect with us. That is not what we want to do. We want to reconnect sellers and buyers. So how do we reconnect sellers to buyers? How do we engage in and stay relevant to the buyer across the entire buying journey. That'll be the topic of our next 30-30. So with that, I'm going to just summarize my 7 truths and 7 myths, and then go to questions.